Okay, welcome. In this video, I'm talking about some points that a person needs to keep in mind who is returning from US but wants to keep his investments in US. So, at the outside, just want to clarify that this is mostly what this video I have made is mostly from a perspective of a person who is a US non-resident, but not a US citizen or a green card holder, right? See, generally, if you are a US citizen or a green card holder, then most of the US tax provisions, almost all the US tax provisions, apply to you as a US resident itself, right? And you continue to be wedded to the US tax system. You continue to file your 1040 on the global world income every year in US, right? So but the situation is typical for person who is not a USC GC, someone who is like on was on H1B visa and came back to India, did not apply for GC or did not get GC or did not get the citizenship. What happens? So that person qualifies as a US non-resident alien. And what happens and what things to be kept in mind? Just to confirm, I'm not a US CPA, and please check with a CPA before taking any financial decisions. Okay. So as per FEMA, as per Indian FEMA regulations, first of all, the question always is that whether the person can keep the investments outside India or there are any restrictions. So the FEMA Foreign Exchange Management Act gives a general, the RBI has given a general permission to Indian residents to hold the investments outside India and even reinvest them outside India. No problem with that, indefinitely, right? But the only requirement is that they should have been earned when you were a non-resident as per FEMA, right? So when you went outside India, you became non-resident as per FEMA. You earned income there. You made some investments there. Now, when you become resident in India, there is no as such a compulsion for you to liquidate those investments, bring back to India. You can keep them in US. You can maybe shift them from US to some other country, right? And indefinitely, right? Okay, so this is a good thing. Now, estate tax. So you need to keep in mind, as I tell in my earlier videos also, that if you become a non-resident as per the US tax law, there is a very low threshold of 60,000 USD, above which, if you hold any US domiciled assets, you will be subject to 18 to 40% of taxes on the value of the assets, plus a complicated estate tax filing process. So your family, your beneficiaries will get the assets. Maybe it can take them 1 or 2 years before they get the assets. Right. So you need to be mindful of keeping the investment value below this amount. And then there are various strategies. I'll make a detailed video on how to avoid estate tax liability legally in US as a Indian returning NRI. So I will make a separate video on that. Okay. Now do proper nominations. So when you have moved out to India, please ensure that your proper nominations are done on all of your investments. Please draw up a will in US, right? If you wish to continue the assets in US. So basically, generally, the provision is every country has a different succession law. So in India, you have a succession, the succession law, separate law. In US, you have a separate law. So if you have multi-country investments, now you may be an internationally mobile executive, which is like who was in US, then the person has come to India, then you go to maybe some country like UAE, you have assets there, right? So if you have multi-country investments, always advisable to make a will, in separate will in each country, and have a separate estate attorney in each country, right? So it's not that you make one will which will cover the all of the countries assets. It may be that if you make a will in India about your US assets, maybe that may not be enforceable in US, right? So please consult an estate attorney in US and get a will drawn up for your US assets. Make the relevant nominations, right? Okay. uh, After returning and becoming ROR, India will tax. So once you return, you get a time period of 2 years, where basically 1 to 3 years you may get, or it may you may not even qualify for RNOR status, right? That is like the golden period where you can decide about your investments. So we are talking in this video about a point where person wants to continue after becoming ROR. So after becoming ROR, India will you'll have to offer the income from those investments to tax in India every year, and it's a mandatory filing, right? Even if you are like a homemaker, you don't have taxable income in India, still you have to file a tax return in India, right? And declare the assets in Schedule FA, right? Now, for 401k or IRA, traditional IRA, you can make a Section 89 election, which is basically a deferral of tax in India till withdrawal. So India gives kind of this good provision that came in around 2021, where India gives like people from US, UK, and Canada, three countries, that if they have any investments in some plans, retirement based plans, where the taxation is on withdrawal. So India says that okay, we will also defer our tax till withdrawal, right? So there will be no kind of every year taxation in India. So you can take benefit of that. You can make a declaration, file a declaration online in Form 10EE on the income tax portal, right? And you can gain a tax difference. So for 401k IRA, you can take that advantage. Okay, to now, when you have returned back to India towards the end of the R0 period, till R0 there is no tax liability in India. Towards the end of the R0 period, you can just reset the cost basis of the investments, even within which are there in your 401k and other places. You can maybe sell the shares. If you have share investments, you can sell the shares and repurchase them back. Do everything to kind of step up the cost basis, so that the cost of acquisition for India tax purposes gets reset, right? And the holding period also gets reset. So in future, the Indian capital gains tax liability may get reduced, right? So that you can do a reset of cost basis towards the end of the R0 period in India. Then very very important thing that is that please do update your Indian address with all providers. Please don't make this mistake of giving friends at US address, all these places. It complicates matters, and it is also not legal, right? So please update Indian address. When you update your Indian address, the payer that the payer the withholding agent in US, which is the broker or whoever is there, who is going to pay you anything, will get a signal that you are a non-resident for US purposes. So accordingly, they will apply the non-resident rates. So they have to apply withholding rates on the incomes, payments made to anyone. So they will apply the withholding rates for non-resident aliens. And also, if you update your W8BEN, you will be able to claim a reduced treaty withholding rate. For example, for dividend, it is instead of 30% flat rate, you can claim a lower rate of 25% withholding as per the India USDTA. So you can update the Indian address with all providers, file a W8BEN, right? These are very very important compliances you need to make. Also, you need to switch. I don't know whether I have covered it in my these points. You need to switch to providers. You need to switch to providers who enable US non-resident clients, right? So not all US providers allow the clients to be non-residents. Some may ask you, if you go and update your Indian address, they can ask you to close the account. So you have to move to providers who do allow non-residents. Some, what I have known is like Schwab is there, and then Fidelity is there, which are non-resident friendly providers. So you can move your accounts to them. Okay. Updating Indian address and filing W8BEN gives them sufficient indication to consider you a non-resident alien, apply NR withholding rates. If they still deduct, now that may be their mistake. If you have a given W8BEN, and if they still deduct as a flat 30% and all, then no option is there at your end but to file a 1040 NR, right? Okay, no state or tax obligations. So every state, so in US the federal structure is, the structure is that there is a federal tax and then there is a state tax, right? And the federal law is different, and state law is mostly aligned to the federal law, but some states have kind of a deviation from the federal law. So you need to understand the state tax obligations in US. If at all, you need to first understand, because mainly generally If you are moving out of US, and you don't own a home in US or no permanent kind of source of income within US, then you are considered as a non-resident for state purposes also, right? But if you are like having a home in US, then you may still, the state may still deem you as a resident and keep keep taxing you on a worldwide income, right? So you need to know your state tax obligations in US as well. Okay, now consider, now when you return back to India, you will start investing in India. You may already have been investing in India, so you have Indian investments, you have US investments. So what basically you need to see the entire investment, right? The US plus India investment on a whole, right? And what is very very important is that you need to check your asset allocation. So generally people uh, uh, spend a lot of time about which investment to make, and which share to purchase. The most important thing that can be a factor in terms of your wealth creation and wealth preservation is asset allocation. That means what is your allocation, having a rule based kind of a system of asset allocation, a certain asset allocation between growth assets, which are equities and real estate and everything, and non growth assets, which is like a debt. So you need to have a proper balance depending upon your age, depending upon your risk profile, and also depending upon the time to goal, right? So for a goal which is short term, you need to have a maximum allocation towards debt or fixed income. But if your goal is far and you can take that risk, you can move a big chunk to risky growth investments, right? So what important thing I'm trying to say here is that when you draw up your financial plan, learn to make your own financial plan. No one can make you hire any financial advisor, any financial planner, any investment advisor. No one can make a plan better than you, because you know about your finances the best, right? And so my request to you is understand a bit about these financial terminologies, how to create a financial plan. I will also post some videos on some ways you can create your own financial plan, right? Keep it simple. My point here, friends, is keep it simple. So when you invest in US, when you invest in India, please do consider index funds, right? Simple low cost index funds. Understand this, what mainly makes the difference is your asset allocation, and not this particular share will rise and all those things, right? So consider the US assets as part of your overall asset allocation. Don't like work in silos, right? Take your entire asset and put it in an Excel sheet, right? Make a asset allocation, see where you are placed. If you are too much on the risky asset side, shift some of the investments to debt, right? Then tag investments to financial goal, right? Every investment should be aligned to a financial. So if you have a 401k, you want to keep it till 59.5, then decide what goal towards it you have tagged. You can tag it towards your retirement. If you are not going to touch it till your retirement, you can still take if your retirement is 20 years away, you can still take exposure to higher risky assets within the 401k, right? So always advisable to tag every investment, be it Indian investment or US investment, towards a financial goal, so you know when you need the money. So if you have tagged an investment to a financial goal which is only 5 years away, then you cannot make have any risky investment within that investment, right? So also evaluate from a currency risk perspective. That means if you have returned to India, you don't have any USD denominated goals, you don't have like a child's daughter's education in US, all your expenses will be in India, and you're keeping money in India. What happens if the exchange rate reverses, right? Rupee becomes stronger, right? So you need to factor in all those things, right? The currency risk angle also you need to factor in, right? Okay. Yes, exception is geographical diversification is example, or if you have long-term USD goals, then you can tag it to that particular goal, right? Now, if you don't cannot do it, take help of an investment advisor, but that investment advisor also should be someone who knows about the currency risks, tax implications of multi-country investments. So, if you are able to find such an investor, investment advisor who has expertise in both country taxation and both country investments and everything, very good. Otherwise, I will say do your own effort and work on your financial plan, right? Okay. Ease. ensure that the ease of access. So you want to keep your investments in US after return to India, and because of various reasons, geographical diversification, or you may have kind of long term USD goals, right? But have you ever thought whether your spouse, right, your spouse or family member, will she be able to access those investments after your death, right? Have you written them somewhere that okay, I have this 401k, it is there, right? You have to approach this particular the customer care to, all that. Have you have do, are you do you understand how difficult it can be for a family member to access foreign country investments, right? Getting them in India, right? Doing all the formalities. So please, uh, your intention may be good in keeping some investments in US, but please also look at these aspects. Have some estate attorney or someone's number whom your family member can call, right? So that kind of foresight you need to have, right? Okay. Reporting and schedule FSI and FA after becoming ROR. So once the you return to India, then a mandatory obligation to file a tax return and disclosure and schedule FSI and FA you have to do. Have a CPA and estate attorney, and if the assets are subject to estate tax, and share the details with the spouse. Then the last and final point: keep your passport, US income details, US investment details, tax payment details in US, right? Like for example, W2 or 1042S, or whatever documents, the official document, or 1040s that you have filed, all that should be filed properly, right? Don't rely on only kind of that it is available, online. Sometimes, because see what happens is that now we have new, finance act provisions which says that before, like, they can only go back 5 years for reassessment purposes, but you can never say, right? My request to you is just keep these details indefinitely. See, don't think that just because you have own income outside India, Indian authorities cannot question it. No, Indian authorities have full rights to question it, especially once you become a resident of India, ROR. They can question these investments. What is the source of funds? And if you transfer them to India, right? All that they can question. So you need to have the details ready, like passport entries. So, for example, in 1 year you kind of filed as a non-resident. On what basis did you file as a non-resident? Do you have the proof? What proof you have? Like, your passport entries are the only proof, right? So for example, one case where the client filed as a non-resident, when I asked, he said that passport is there, but because there was some, the liquid spillage was there in the bag, so the entries, they got kind of blurred. So then that can be a problem. How will you then establish that you were a non-resident and your global income was not taxable in India? So when you have these incomes, and when you want to keep the investments in US, you need to preserve, make a file every year wise, your 1040, then on your income details, the employment contract, the passport. Take a kind of a one copy should be there in your scan folder, a separate folder, and one copy should be there as a hard copy, right? So all that precaution, and retain them indefinitely. Don't kind of, in that intent of cleaning up things of past years, don't touch your tax thing. I still have my tax thing for like past 10 years. It is there. I do not destroy. So better not to destroy those things. And right, so this is it. I hope this video gave you some pointers. If you have any thoughts, any queries, do please share in the comments section below. Thank you so much.